let's go global now. We're starting where Israel saying that it will no longer target energy infrastructure after an attack on an Iranian gas field that sparked retaliatory strikes against energy assets across the Middle East, causing oil and gas prices to surge and prompting a rebuke from President Donald Trump. They said that they acted alone, according to the Prime Minister Benjamin Netanyahu. He said that at a press conference yesterday after Israeli officials previously said that they had informed the U.S. about the attack. And talking about the United States, they may permit sanctioned Iranian oil currently stored on vessels to enter the market as part of efforts to manage rising crude prices. Treasury Secretary Scott Bessent said that there were approximately 130 million barrels of Iranian oil on water that could be utilized to keep prices down. And the Treasury Secretary indicates that the U.S. has allowed Iranian oil to continue flowing out of the Gulf despite ongoing tensions. And the comment, of course, came after benchmark. We saw prices yesterday jump to above $119 for a barrel. Let's see how all of this is affecting the markets in the United States. Our correspondent in Washington, Maria Bird, has this to say.
The U.S. stock market was still in the red on Thursday, as the Dow Jones was down at 0.4%, the S&P 500 was down at 0.3%, and the heavy tech Nasdaq was also down at 0.3%. As many investors were watching to see what the oil prices, as there seems to be a taming down in the gains we saw earlier in the week, as this could be due to the fact that there is some de-escalation in the tension in the Middle East. As many investors continue to watch, as Wednesday was a major day of bruising of the U.S. stock market and also seeing a steadying of interest rates, and Chairman Powell stating that we could be seeing inflation continue over the next few months ahead. As many investors continue to watch the marketplace, they are hopeful that the U.S. economy could see a rebound in the near future.
A bit away from oil now, a wave of U.S. soybeans reached Chinese shores this year as a deal between the two countries revived trade. But the delay of President Donald Trump's visit to Beijing is clouding prospects over how long the influx will last. China brought in 1.45 million tons of U.S. soybeans in February, and that's the most since June, according to data from China Customs. And that added to 38,000 tons that arrived in January. They mark the first arrivals of a flurry of cargoes booked by state buyers after Trump and counterpart Xi Jinping struck a deal truce late in October. Now, commodities, talking about gold prices rebounded in Asian trade today, but are nursing deep weekly losses as the U.S.-Israel war on Iran raised inflation expectations and dent bets on interest rate cuts. The yellow metal had tumbled on Thursday after several major central banks flagged caution over the inflationary efforts of the Iran war. And this, in turn, fueled expectations for no interest rate cuts. We saw a lot of that yesterday in the near term, and a scenario that bodes poorly for the precious metals. Gold went up 1.2% to $4,706.99 an ounce, while gold futures rose 2.2% to $4,706.54 for an ounce. In Europe, gas prices spiked by 25% after a wave of attacks on energy infrastructure in the Middle East, and that included strikes at the key liquefied natural gas facility in Qatar. And that, of course, is threatening the price of energy on that region. German producer prices fell more than expected in February, decreasing by 3.3% on the year, according to Federal Statistics Office. They reported that today. Analysts had polled showed that they expected a 2.7% decline for the price. And Jeff Bezos is in early discussions to raise $100 billion for a new fund that's aimed at acquiring manufacturing companies and implementing AI technology to speed up their automation processes. The Amazon.com Incorporated founder has been meeting with major asset managers globally to secure funding for the initiative, according to a report from Wall Street Journal. And also related to that, the fund is described in investor document as a manufacturing transformation vehicle. It targets companies in industrial sectors, including chip making, defense, and aerospace. The fund size will match SoftBank's $100 billion Vision Fund and exceed many of the world's largest buyout funds. Bezos was recently named co-CEO of Project Prometheus, a startup developing AI models designed to understand and stimulate the physical world. Project Prometheus separately is pursuing up to $6 billion in funding, according to analysts. Britain borrowed more than forecast in February, showing the risks facing the public finances even before the war in Iran upended the economic outlook. Spending exceeded tax revenue by £14.3 billion. That's about $19.2 billion. This is according to the Office of National Statistics. They released that earlier today. And there's also the shortfall that's predicted by economists, and double of that. And then we move over to India, where the country is considering introducing real-time foreign exchange settlements in euros at its sole international financial hub, a step that would deepen financial ties as European Union India trade deal progresses. The International Financial Services Center Authority, which regulates the hub, has approached the government to permit the use of euro alongside the US dollar for such settlements. Well, there are still conversations going on about this, and they said it's private at this time. South Africa has approved new import taxes to protect its steel industry after a probe found that cheap imports of some products from China and Thailand unfairly undercut local manufacturers. Trade, Industry and Competition Minister Pax Tao authorized the tariffs recommended by the country's International Trade Administration Commission, which first initiated its probe in 2024. And this is according to a notice that has been issued by the government. And some of those places perhaps that some investors might be looking to hedge is the cryptocurrency. We see Bitcoin, it's steadied near $71,000 today after falling below $69,000 in the previous session as volatile oil prices caution over the Federal Reserve's hawkish policy outlook is weighing on risk appetite. The world's largest cryptocurrency last traded 0.3% lower at $70, 675.7. Bitcoin fell to as low as $68,000, 814 on Thursday, when a brief spike in crude prices triggered a broad retreat across risk-sensitive assets.